What's up guys, welcome to another video. This will be video number 6 I believe. So this is going to be the beginning, kind of the base beginner video for anyone who has no idea what I've been talking about in the past videos. So I've gotten a lot of people who told me that they have no idea what I'm talking about. They don't know anything about options, but they would like to get into options. So that's kind of what this video is going to address. So obviously, and this is a disclosure, I'm not an expert and I'm not a professional and I'm not claiming to be better than anyone else on the internet who knows about options. That's not where I'm coming from at all. I'm coming from the standpoint of I am a semi-beginner, but I've also learned a lot in the process. So I'm going to use what I've learned to make these kind of videos so that the people who are also looking to get into it as a beginner, they can learn as well. So I'm not saying that I'm better than anyone. That's not the point of these videos, or that my ways of trading are better than anyone. But I am saying that from the experience that I've had, I have learned a decent amount about how to trade options. So that's why I'm doing these videos, is to help you guys learn as well. So obviously, the first thing is calls and puts. That's probably what you hear the most when you hear about options, is a call and a put. So like, what is a call and a put? Well, a call, I'll just go ahead, I looked it up on Investopedia.com. This is a super technical answer, which is not going to make any sense, but I'm going to go ahead and give it to you so you can see what it says. So according to Investopedia.com, stock options are sold by one party to another that give the option buyer the right, but not the obligation, to buy or sell a stock at an agreed upon price with a certain period of time. So like I said, that probably didn't make a whole lot of sense to anyone who's just hearing that for the first time. So to simplify that and make it super easy, to answer the question, what is an option? An option is basically a contract that represents 100 shares. And with that representation of 100 shares, you agree or invest in a certain price that you think a stock is going to be at by a certain date. So to rewind that and take that slower, if you buy a call, you expect that the price of the stock will go up in a week or 2 weeks or a month or a month and a half. With a put, you expect the price of that certain stock to go down to a certain price in a week, in 2 weeks, in a month, even long. It could be longer, it could be next year. But basically, you're not buying any stock whatsoever. You're not buying, you're not selling, you're not buying stocks. You're buying a contract that represents 100 shares of a certain stock at a highly discounted price. So if you go on to Robinhood, or you go on to Thinkorswim, or you go on to Webull, well, Webull doesn't trade options, but if you go on to Tastyworks, which is a pretty cool platform as well, any of these options trading platforms, you'll see a strike price, you'll see expiration dates, you'll see calls, you'll see puts, you'll see all of this. So let's say, to put it into a practical sense, let's say I think Apple, let's say Apple's trading at $30 right now. Let's say I think Apple is going to trade at $35 in the next 2 weeks. I will buy a call, because that means I expect the price to go up, for $35 in 2 weeks. Let's say I think the price of Apple is going to plummet to $20. And I know that's not the actual price of Apple, I'm just using an example. Let's say I think it's going to drop $15 in the next 2 weeks. Then I would buy a put contract for $20 in 2 weeks, 3 weeks, however long I think it's going to take to get there. And that's pretty much it. I mean, obviously, since this is the beginner video, since this is the one that I'm not going to talk about, the Greeks and option trading strategies and credit spreads and all that stuff, I wanted to stick to the basics for the first one, because obviously you learn things in steps. You don't learn things all at one time. But for those people who are asking me, what is an option, what is a call, what is a put, I wanted to give basically a baseline for them to build off of, so when they watch my other videos, they'd be like, oh, that's what he was talking about. So to go one step a little bit further, a strike price is what I was talking about. So when I expected it to hit a certain price of $20 for puts or $35 for calls, that individual price that you think it's going to be at is called the strike price. And that strike price is what determines whether you're in the money or out of the money. So while this is still getting a little bit deeper, when you're in the money in an option, that means that you are buying a contract where the stock price and the strike price are either the same or less, and that's for a call. So why that, again, is probably a little bit confusing. If you buy a put that is in the money, then you're buying a stock price and a strike price that is higher. So while that, again, that's probably confusing, if you want to go out of the money with a call, you'll buy a price that's higher than the stock price. If you want to make money with a put that's out of the money, then you'll buy a price that's less than the current stock price. And there's really like no other way for me to explain that other than you just trying it and seeing it and looking at trading grids on Robinhood or Thinkorswim or whatever platform you use. But that's how that works. So the farther out of the money you go with a call or a put, the cheaper the option will be. So I'm going to say that again. The farther that you go out of the money, so let's say Apple's trading at $30. Let's say that I want a strike price of $60. That $60 option price is going to be very, very cheap. And the reason for that is because there's a very low probability that it's going to happen in the given amount of time that you choose for the expiration date. Same with puts. Let's say I expect the stock price to go to $5 and it's currently trading at $30. That's very far out of the money, so that option price is going to be very cheap. That's why you hear of people making, several 100% on option prices, because on the chance that that certain stock price does actually hit out of the money to their strike price or below or close, then they make all of that money in return from those option prices. And that's one of the things that are different with option prices and options trading. The ability for you to make 100, 200, 300% return in a very, very short amount of time is way higher than buying just pure stocks could ever be. But the risk that you could lose that money that you invested also is there. Because let's say that you buy an option and your stock price doesn't meet that strike price and you don't sell before the expiration date, and you invested $200 into that option price, then all of that money that you invested will be gone. And that's kind of one of the things that you have to watch. Because with a stock price, that would never happen. That would never happen with a stock price. But with option prices, it's possible. So it's one of the things you have to watch out for. As you can see here, I made 251% in one day. Now, why that's, you could say lucky. I expected it to do that to a certain extent, but just not as much as it did. So I lucked out on that. But sort of. I don't consider it luck when you expect it to do that and then it goes further than you expected. So I'll take it. I mean, 250%, 251% in one day is pretty good. Only investing $200 and then making $500 off only $200 And while that would never happen in stocks, that's not to say that you shouldn't trade stocks. That's just to say that options pose a greater risk, but they also pose a greater reward if they're done right and if you learn them properly. So, like I said, this is only the first part of this video. I want to greatly extend the depth that I go into options. But for those who have no idea what options were, or if you think I could have explained something better, then leave it in the comment section. A question, a concern, a topic for the next video that I didn't cover in this video. I would be happy to do that. But yeah, I mean, there's endless amounts of information on options. There's the Greeks, there's implied volatility, there's options trading strategies. There's all kinds of stuff that go along with options. But not to scare you away, because do you need to have a general gist of all of these things to trade options? Sure. But, and I may get, in trouble for saying this, but not really. Because anytime that you expect a price to move somewhere and you buy an option in that general direction, chances are you're going to make money off that. But you also need to learn, and as I've said in my previous videos, that you need to get out when you have profit instead of holding it. So I hope that kind of covered a general majority of a lot of basics with as far as options goes. I know I could have gone a lot more in depth, but I didn't, because I kind of wanted to keep this as an intro video to them in general. But yeah, expect me to go further in depth. I appreciate you watching this, and stay tuned for the next one.